Qualcomm has announced a substantial $40 billion investment in artificial intelligence infrastructure and development. This represents a doubling of the company's previous AI commitments, signaling aggressive market positioning as the technology sector races to capitalize on explosive AI demand. The semiconductor industry is experiencing unprecedented momentum as enterprises worldwide accelerate their digital transformation initiatives. Market analysts view Qualcomm's expanded investment as a critical response to competitive pressures from rivals investing heavily in next-generation chip architectures and AI-optimized processing capabilities. Memory chip prices have surged dramatically over the past quarters, driven by insatiable demand from data centers, cloud computing providers, and AI application developers. This price appreciation reflects structural changes in the semiconductor market where traditional supply-demand dynamics have shifted fundamentally toward undersupply. Micron Technology, a leading memory manufacturer, is poised to see its revenue more than quadruple, according to industry sources tracking the company's financial performance. The memory specialist's exceptional growth trajectory demonstrates how comprehensively the AI boom has reshaped demand patterns across the semiconductor value chain. Revenue expansion of this magnitude would position Micron among the semiconductor sector's most significant beneficiaries from the current technological transition. Investors are closely monitoring whether these revenue gains translate into sustainable profitability improvements or represent a cyclical uptick that could face normalization pressures. The broader semiconductor sector's implications from these developments have not yet received official confirmation from major manufacturers or industry bodies. This uncertainty creates both opportunity and risk for investors evaluating long-term sector exposure and individual company valuations. Qualcomm's $40 billion commitment reflects management confidence in sustained AI demand and the company's strategic ability to capture meaningful market share in competitive segments. Industry observers note that such capital deployment decisions typically signal internal projections of extended growth runways extending multiple years into the future. The doubling of Qualcomm's AI investment distinguishes the company among semiconductor peers in terms of relative commitment magnitude. Comparative analysis suggests this positions Qualcomm competitively for capturing design wins in next-generation AI accelerators and specialized computing platforms. Memory chip price appreciation has created windfall conditions for suppliers positioned in the value chain's highest margin segments. The price dynamics reflect genuine scarcity conditions rather than speculative excess, according to supply chain analysts tracking manufacturing capacity utilization rates globally. Micron's potential revenue quadrupling would represent extraordinary growth even by semiconductor industry standards, where double-digit year-over-year expansion is typically considered exceptionally strong performance. Such expansion implies either unprecedented demand surge, significant market share gains, or a combination of both factors accelerating the company's top-line trajectory. The financial implications of these revenue projections suggest potential margin expansion opportunities if manufacturing costs remain controlled and operational efficiency improvements materialize. However, analysts caution that capacity investments required to support such growth could constrain near-term profitability despite revenue acceleration. Qualcomm's strategic positioning emphasizes artificial intelligence workloads where the company seeks to establish architectural advantages and technology leadership. The company's investment framework addresses both hardware development and software optimization ecosystems supporting comprehensive AI platform solutions. Industry sources indicate semiconductor demand drivers have fundamentally shifted toward artificial intelligence applications across enterprise, cloud, automotive, and consumer segments. This secular transition distinguishes the current cycle from previous semiconductor booms driven by specific device category penetration or geographic market expansion. The confirmation status of broader sector implications remains uncertain as companies await official guidance and industry data validation through standard reporting channels. This information gap creates analyst challenges in building comprehensive semiconductor sector models and updated revenue forecasts. Qualcomm management's confidence in AI market sustainability appears reflected in the capital intensity and timeline implied by $40 billion investment commitments. Long-term investment of this scale typically presumes multi-year demand visibility and strategic conviction regarding competitive positioning requirements. Memory pricing dynamics have created competitive advantages for manufacturers with advanced production technologies and efficient cost structures. Micron's potential revenue growth suggests the company's competitive positioning has strengthened relative to competitors facing higher manufacturing cost baselines. The semiconductor sector's official confirmation of broader implications would likely trigger analyst consensus revisions across multiple companies and subsegments. Currently, incomplete information creates disparities in valuation models and investment positioning among different institutional investors. Qualcomm's AI-focused investment allocation signals management assessment that artificial intelligence represents the semiconductor industry's primary growth opportunity over the next technology cycle. This directional commitment shapes the company's product roadmap and research and development prioritization frameworks. Memory chip suppliers benefit from constrained supply-demand balances that support pricing power and margin expansion opportunities currently visible in market data. The sustainability of these favorable conditions depends on production capacity growth rates and demand normalization timing. Micron's revenue projections, if confirmed, would establish the company among semiconductor sector's highest growth performers and potentially attract broader investor attention. This positioning could influence institutional capital allocation decisions across the semiconductor industry subsector.